Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, let's go over what is happening with Tesla, what is happening with the market, what I personally expect moving into, I guess the rest of this week. And again, we're getting pretty close to Tesla earnings, right? Let's take a double check over here. Tesla earnings is next week, Wednesday. It's pretty much just a week away. So let's just talk about, what I foresee happening. Let's just talk about, roughly going into earnings from here on out. So as usual, if you enjoyed, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, if you enjoy my kind of analysis, if you want this kind of analysis on a daily basis, but like as the market is trading and open, as opposed to only when it's closed, I do have a membership on YouTube for just $2.99 a month. Again, I share all my thoughts, post updates on Tesla and sometimes other stocks as well. Every single day the market is open, or for $5 a month. Same idea, you get all of that, plus NVIDIA daily updates as well, if that's what you're interested in. Decided to give people options if they actually want that or not. It's all up to you. But yeah, let's jump right into it. And Tesla closing the day, actually surprisingly, in the green for once, closing at 0.6% in the green, which isn't too crazy compared to the market. For instance, QQQ up almost 1%. So Tesla, despite that, still a bit of an underperformance, but intraday there was some pretty spicy action. I'll go over all of that right here, right now. And yeah, closing at just above $219 per share, which it's not amazing, but it's not bad. And I'll go over why I think that is and why I think this is potentially kind of, anyway, let's just get into it. So very quickly to reiterate what happened today, right? We had a, nice open, had a gap up, and then not only do we come back and fill the gap, which is already a sign of weakness, because again, if you have a gap up, coming back to fill the gap almost instantly is a sign of weakness. Now, obviously holding it is still technically bullish, and overall, as long as you hold above the gap fill, so in this case, we came from up to down, right? So again, we pretty much went up from like 222 roughly down to the gap fill at 217, 218. As long as you fill it and hold above it it's still technically bullish. It's just less bullish compared to leaving the gaps just wide open and gapping and going essentially, right? That's more bullish. But we came right down to it. Not only did we come down to it, but we actually had a lot of issues pushing up even higher, even though the market was actually just consistently moving higher throughout the day. That to me, I did not like. I actually exited my position for a very small profit, and then I actually re-entered right over here. And I actually did exit right as the market closed because I need to see how tomorrow opens. Now, the reason is because this, right? So it shows a lot of weakness that we came back to fill the gap, and we actually went down below the gap, and we actually broke the low over here. We did do some stop loss hunting over here. We did do some bear traps. You can see, despite us breaching lower than this low over here, which is a bad sign, like that's not a good sign. This was very concerning initially, but the fact that we actually just still closed both 15-minute candles above that range is very, very important, and to me shows that this was like at least a massive bear trap and a stop loss hunt, which is arguably actually kind of bullish. This is actually kind of a bullish reversal in my opinion, which is what we got. And you can see we pretty much rocketed ever since. And yeah, pretty damn good. So I like to see that. Now, there is a few signs of caution that I would watch for intraday, like very short term, like pretty much as early as tomorrow. And it's pretty simple, right? This is how I look at it on like a 15-minute chart. This is more of like a day trading / 1 or maybe 2-day swing trader type situation where there's two options I see right now for Tesla. If Tesla can start closing 15-minute candles above, I'd say about 220, right? If we can start closing 15-minute candles above about $220 per share, which you can see, we pretty much, failed doing that for most of the day. Every time we come up anywhere in this area, we just kept getting rejected. We were actually doing a bit of an ascending triangle here. I was hoping this would hold, but it didn't. We actually fell down below it, which is one reason why I ended up exiting for a profit. Pretty good profit too. I went in at 215, sold at 219. I'm very happy about that. But the fact that we broke down below this ascending triangle, which is what I was eyeballing, which is what I was hoping that we would break above, is a bad sign. I don't like to see that. So the way I look at it is this. If we can start closing 15-minute candles above 220, that's bullish. If we can't, and I guess essentially if we can't, I expect a bit more weakness. And the way I look at it is if we do get some weakness, let's say maybe even tomorrow morning or something like that, which I'd expect it to be pretty soon if it were to happen at all, I'd expect us to move back down to about the 217-ish range, which in that case, as you can see here, I'd expect us to start forming up this potential inverted head and shoulders pattern where we have the left shoulder here, we have the head here, and now we have the right shoulder over here, right? So as long as we hold about 217, I think we're forming up this pattern pretty beautifully, and I think it's looking pretty solid. And then regardless, we still have to break above about $220 per share because that's roughly where that kind of neckline roughly is, right? So that's kind of what I'd be roughly eyeballing moving into pretty much tomorrow, honestly. That's, again, more of a day trader and potential swing trader if you get the entry here or if you get the entry in the breakout. I do think we're going to about the mid to high 220s, maybe even low 230s. And I'll explain why I have that target very soon. Obviously, the first reason is because, well, this inverted head and shoulders pattern, if we measure the move, right, usually what you do is measure the move from the bottom to the neckline, which would be something like roughly like this. And then if you break out finally, right, you can see this measured move, it pretty much brings us up somewhere around to that mid, like to high-ish 220s, give or take, of course, give or take, right? Somewhere around there. Another reason why I have the mid to high 220s to potentially even the low 230s as a potential target is this. We're inside this little red downward channel right now, right? This is the downward channel that we're in. We obviously are towards the bottom of the channel right now, even today's price action, which is good. But essentially, if we do end up getting a bounce from here, right, naturally the resistance area in a downward channel would be pretty much the top of the channel, which in this case, as you know, depending on when it happens, let's say it happens tomorrow, it'll be 230. If it happens on Wednesday, it'll be closer to 227, right? Because it's, of course, descending. So I expect us to potentially come up to this general area sometime potentially within the next few days, assuming we can break above 220 and ideally close at least a 15-minute candle above 220. I do think that we would get a move back up and get a little bit of a mini dead cat bounce even higher. Now, obviously, if we can break out of this downward channel, that'll be a different story entirely. We'll talk about that if or when it happens. But as of right now, I would expect naturally, again, it's kind of like when we were in that rising channel, which I now deleted because I think it's irrelevant. It's pretty much been playing out now. But remember how we were in that rising channel? I kept saying, well, technically while you're in a rising channel, I mean, you are technically bullish until proven otherwise. Same idea here, but now we're just in a pretty steep descending channel. So as long as we're inside this steep descending channel, I'm going to assume that we will continue descending while we're within it. Whether or not we get a dead cat bounce is another story entirely. But as it stands right now, I would expect us to continue descending in a, again, pretty steep looking descending channel. So there is a chance that we get a small little bounce up here, let's say to like, you know, mid to high 220s. And then we could get a sharp projection down lower pretty substantially to the low 200s, like somewhere around 207, 205, 202, somewhere around there to come back to the bottom of the channel. At which point I would be surprised if we do not hold, at least to a certain extent. Now, this is where things get really complicated, right? That's like the simple way of putting it, but this is where it gets complicated because if we do come back down to the bottom of the channel once again, let's say, you know, the very low 200s, 205, 202, whatever, somewhere around 207 to 202, around that $5-ish range. Let's say we do come down there. It's concerning. And the reason it's concerning is because you can see this red line, this massive red line, trend line, ever since we had that low back at the 140s, connect that with the low that we had here before the massive rally pretty much got ignited once again, right? So this bottom ignited this rally. This bottom right here at 182, that remember when the whole market crashed essentially, and then everything reignited back up. Well, again, connect those two dots, both of them led to massive rallies shortly after. And well, that's the trend line we're pretty much at right now. So that's another kind of confluence that we're in, where we're in a steep descending channel. Again, I assume we descend until we break out of the channel, which maybe we will. That's a possibility. Of course, we'll talk about it if it actually happens. But if we do come back down and we continue descending and we continue moving down and we go back to the bottom of the channel again in the very low 200s, which is the Fibonacci target, right? So if we go over here, we take this Fibonacci, bam, go from here to the recent high up here. Right, that is going to be around that 0.786 Fibonacci level, which is pretty much sitting just about $200 per share. So if we do actually come back down there, the thing that's concerning about that move to me at least would be the fact that we're breaking below this red line, right? We'd be breaking below this massive red trend line, which is the one that I showed on Friday about that. Remember that weekly trend line? If I open up TrendSpider, this is the logarithmic version of it. Let me show you the logarithmic version of it, right? This is the weekly trend line, right? Again, I don't want to drop below this because, again, in my opinion, if there's any hope for bulls for this to be the bottom, which again, there is a chance that this rough area that we've been in recently, like 215-ish, is the bottom, like literally the bottom. There is a small chance that that's the case, but this has to hold. Like we cannot go lower than that, right? Because if we do go lower than that, especially if we close the weekly below that, again, on the logarithmic chart, we'd be closing below this weekly trend line, right? This is what it looks like on the daily. You can see here, right? We're pretty much just barely above it, like ever so slightly above it. So take that for what it's worth, right? That's a little bit concerning. Or on the weekly for the linear chart, you can see we're pretty much right at it roughly as well. With the daily chart, you can see we're pretty much right at it as well. So TLDR is like, I don't want to go much lower than really today's low. Like that's pretty much all it comes down to, because even if we go down below today's low, I do think we'll come down to low 200s. I do think we'll actually still get a short-term bottom from there. And I think we'll reverse back up and probably come back up to retest this trend line, which will make us still go up to about the mid 200s. It's just a matter of, the issue is we are breaking like almost every ascending bullish pattern that we had, because again, we lost that, the bullish channel that we had. Bam, we broke down below. Not good. Cool. Next one, we have this line that we have, the red line right here. If we break below that, okay, that's not good either, right? We're breaking below a lot of these ascending trend lines, if you will, that have been holding bullish momentum. So losing all these would be really bad. And pretty much the way I look at it is, if we really lose and especially close below 215 or below today's low, like around that $2-ish range, I think Tesla gets even more bearish, and it technically already is, arguably a little bit, right? And I think at the very least, if that were to happen, despite potentially finding a bottom in the very low 200s and maybe coming back up to get retest of this trend line, and then I think we'll make our way back down regardless. And I think at the very least 180s, potentially to 170s, worst case, closer to the 150s, becomes like an actual, like literal, like realistic situation that we can find ourselves in pretty damn quickly. So that's just something you want to be really careful about. Again, especially with earnings coming up pretty damn soon, you really want to be careful with how we go into this, right? We have, of course, elections heating up, I'm assuming at least probably pretty damn soon. And the issue is the market is rallying. The market is just consistently making all-time highs, or at least SPY is. You could use almost at all-time highs, while Tesla's just selling off, right? Like, what if the markets decide to come back down? Will it affect Tesla? It might, right? It might. Obviously, Tesla can potentially do its own thing, but it absolutely has a chance to affect Tesla negatively as well. So there's just those things that you really, in my opinion, at least really want to be a little bit careful of, because Tesla is in like a second version of make it or break it here, right? Make it or break it. The first one was that initial rising channel that we had, which of course, we already broke down below, right? You already know that story. That story is already essentially played out. We're in the second stage now. And again, this is also really important. Breaking below this, I really do believe that despite any short-term bounces that we'll get like this, I think ultimately we will make our way back lower, back into the price that starts with the first digit, the number one digit, right? Essentially is what would happen, in my opinion, if that were to happen, which I think as of right now is a real possibility, Now, granted, I want to make it clear, we are very oversold on Tesla. Tesla is extremely oversold. So I'd be pretty surprised unless the whole market literally crashes. I'd be very shocked if Tesla from here goes almost straight down to, like, let's say 180 or 170 or whatever. Like, I'd be very surprised if that happens like almost instantly. Because again, the stock it is very oversold. Like, it can just literally only go down, right? It will have bounces, despite how quote unquote bearish the chart might be, or the stock, or whatever the case may be. It will have bounces. The issue is the fact that, does it happen while we're holding this trend line, or do we break down below and then bounce from here, and then the kind of cool off section of Tesla happens to only be just a retest back up to this trend line, which then will reset these kind of indicators of being oversold. That will be that kind of cool off phase from exiting extreme oversold territory, and then we just make our way lower, right? That becomes a very real possibility. So that's just something you'd really want to look out for the next days to potentially even a couple of weeks or so. That's going to be what I will personally be paying attention to very closely. And yeah, we're in a very delicate spot here, in my opinion. We're in a very, very delicate spot. So yeah, that's just kind of the way I look at it. Now, the best case scenario for bulls is the fact that this is literally the bottom. We hold this area. We don't go below 215 to 213. We hold the weekly trend line, and this kind of red trend line I'm showing right here on the weekly and the daily chart. We break out of this downward wedge sooner than later, and then we make our way back up. That's like the best case scenario for the bulls. I think it's a bit of hopium. I'll be completely honest. I don't see that happening. But again, it doesn't matter what I think or don't think will happen. What matters is you react to the levels and to what the chart is saying accordingly as it's happening and as it's fluctuating. That's the most important part. It doesn't really matter what I think will happen. What matters is what will happen based on the levels that are holding or not holding. That's what matters. And that's what I'll be looking at. And I'll be looking at it as, again, objectively as I possibly can, removing all emotion aside. Yeah, that's just really the only way to put it. I mean, to really put it simply, unfortunately, Tesla's nowhere to be found on the bullish, or, I mean, ideally, I guess it's down here on the bearish, but very little. Yeah, so I don't know. We'll see. That's just the way I'm looking at it. Again, with earnings coming up, that's another catalyst to watch out for. So let's see how it plays out, ladies and gentlemen. Let's see how this plays out. Let's see how it moves. But as of right now, it's still looking bearish. The only potential good thing is the fact that it is very, very oversold. But if NVIDIA is any indicator, again, and I said this before, being oversold or overbought in NVIDIA's case doesn't mean that it's bearish. For instance, NVIDIA right now, very overbought. I'll talk about that more in my NVIDIA video. Does that mean it has to crash from here? Absolutely not. It does not have to crash from here whatsoever, but it is overbought. Same with Tesla. It is quite oversold. Does it mean it has to bounce from here? Absolutely not. So, just take those for what it's worth. But, if there's a place to start getting bullish or start looking for potential entries, I'd rather look for me personally, I'd rather look for it down here than up here in the 260s. Yeah, so anyway, that's kind of what I'm seeing. That's kind of what I'm looking at. Thanks for watching. Let me know what you think. See you tomorrow. Peace.